What's going on, family? Welcome to tonight's live stream. I am here I have a couple guests tonight, and I want to talk to you about home buyer hesitation. We've seen purchase applications for the last few months decline, but they have ticked up the last 4 weeks. We want to talk about that. We also want to talk about the increase in conforming loan limits and what that means for buyers and sellers, and just what we're seeing in the market right now. I have some professionals that I talk to just about every day. Um, yeah, I can say between the two of them, I talk to them every day. And I rely on them for their advice and guidance. And so I thought they would be just perfect to have them on together. And let me introduce Sahaad and Ortez. So feel free, leave a comment, leave a question. If you have a question, put a Q in front of it so I know that it's a question. And we will talk about what's on the agenda, but we'll also answer any questions you have. So this is streaming via Facebook and YouTube right now. I ask that you leave a comment, that you like the video. Sahad's messing around with the camera. That you like the video, leave a comment, and let's jump right into it. All right, you with us, Sahad? Perfect. So I really want to talk about home buyer hesitation and what you all are seeing on the mortgage side as far as decrease of applications or if it has been a pickup in applications, and what the rationale is for people not moving forward right now. I'll go to you first, Ortez.
Well, as far as the application, hey, Sahai, turn down your. I'm getting some feedback from you, if you wouldn't mind. I think it's like your. All right. So as far as applications is concerned, it's steady. It's a slight pickup, but nothing as outrageous as it was earlier in the year. In comparison to last year. And buyers' biggest hesitation is, I don't want to put it. I want to wait until the rates go back down.
Yeah,
That's
yeah,
the biggest thing.
yeah, yeah.
and I always I always tell buyers that's a cool thought, but that's not something that you can bank on, right? So and I was just kind of playing not necessarily devil's advocate, but what I would suggest to everybody who wants to wait, I would suggest that you make yourself ready for when the time comes for you to purchase. And what I mean by that is a lot of folks will wait for the rate to go down so they can potentially afford more. Well, an easy way to afford more is get out of debt. Like, you'll be amazed at how many eliminated credit card payments that we can apply towards your actual mortgage payment that will increase your buying power by tens of thousands of dollars. That will What that will do is, because what happens is when the rates do fall, everybody's buying. So what that does is, if you're out of debt, that means you can afford more house. That means you're buying something no one else is fighting for.
Most
So
definitely.
if you're gonna wait, get in shape, I would say financial shape. So
Amen. Amen.
that is, like I said, eliminating any debt that you have. No offense and jokes aside, $1,000 car payment is just making you worse. Like, you might as well live
No,
in your car at that point.
you
So
can. Jokes are welcome.
yeah,
Jokes are welcome. Bring it. It's
so I tell
Thursday
my,
night.
tell clients, like, hey, if you really like, sacrifice now to get what you want later. So if you're gonna wait, if your mind's made up, hey, you're gonna wait. All right, do the financial work while you're waiting. So then that way you can come back to me. I'm gonna surprise you with what you can afford because you took the time to make sure that you're equipped to go ahead and purchase in the future.
No, I think that's excellent advice. Too often I hear people talking about waiting, and actually, we were dealing with somebody that waited in the springtime while the rates were what, fours, and now they're in the sevens, and not only are they able to get approved for less, but they didn't work on any of their other matters. So if you are going to wait, I second what you said. Make sure you're doing it with a plan and sticking to that plan as you move forward. Don't just say you're going to wait and wish and hope. No, save up more money for your down payment, get rid of some debt so you can be in a better position financially as you look for a home. Sahaad, what would you say is the biggest impediment that you've been hearing from people as far as moving forward right now? I think we lost your volume. Hold on. I got you.
To
There you
be
go.
completely honest with you, the biggest thing, and this is always the biggest thing, it's louder right now because there's not as much traffic with transactions. Is people using the internet, Google, TikTok, social media platforms, and absorbing misinformation about, oh my God, the recession is coming. Yeah, it is coming. That doesn't mean we're going to have a deplorable housing market. They are not the same. And people in fear-based thinking around home ownership, right? You needed a home last year, you need a home this year. I really just feel like the excuse making is is like overwhelming. Like it almost feels like you were just looking for a reason to make another excuse for yourself, because those that are willing, ready, and able to acquire homeownership, they're tuned in. Whether the rates are up, whether the rates are down, they have made the decision that their family is going to be in a home, and
Yeah.
they will sacrifice, they will get disciplined. There is a big divide between those that are ready, willing, and able, and those that are procrastinating, playing around, and like to make excuses for themselves. I know that Ortez and I see the black and white. I always say that we get to see you naked. And when they talk to their realtors and they're out shopping for homes, you get a side of them, their representative as the client. We
Yeah,
all
yeah,
do it.
yeah.
Ortez and I get to see the real you and how you manage your financial life. It says a lot about it shows a lot about how you operate. And when you go into the homeownership process, the mindset has to be correct. So, what I'm seeing right now is those that were making excuses before are still making excuses right now. Those that were ready, willing, and able before are ready, willing, and able right now, in taking advantage where they can, because their mindset is we're going to achieve homeownership. So that is what's happening right now. There's still traffic, it's just coming from different lanes.
No, I totally agree with you. I am getting called and emailed on the daily from people wanting to move forward, wanting to uh, pursue home buying, regardless of what the rate is, because they've
Mhm.
done the math. They've seen the math. They know that the interest rate for rent is what, 100%.
Yeah.
and
When's the
and
last
they're
time you
saying
refinanced your rent?
yeah, so they see what they're throwing away in rental payment, and they want to settle down. They know they're going to be in the place long term, anywhere from 3+ years, and they're like, this is where we want to be, this is what we're going to do, and they're moving forward. And right now, what I'm seeing as far as putting offers in and talking to, you all know I deal with a lot of new home construction. um, People that are making offers, and I mean like disrespectful offers, like just silly offers that would not have gotten countered or would not have even seen the light of day, what, 4 months ago. We're not getting those accepted, but
Mhm.
they're coming back and we're playing to where, what, $80,000 off one home, $55,000 off another home, just this past week, about what, 40,000. So it's just one of those things that right now, while there is less competition in the market, it is your time for buyers that have prepared and are
Mhm.
ready to act. And that's, I can't stress that enough, because especially, I know you're not builders lenders, but builders lenders, to get you in the door, will pay down your loan just to make it attractive for you. So, and for resale homes, if you want to compete as a seller, you're going to have to market your property with saying, hey, we're offering to pay for a 2-1 buy down, or we're offering some seller credit or closing costs if you're a seller in this market right now. So just be aware and take advantage of whatever the circumstances are. You can position yourself to win.
Yeah, I agree with everything that you just said. And Ortez and I speak frequently, almost on a daily basis, whether we're discussing loans, or community stuff, files, what's going to make sense. And this is really the best time for buyers, and they don't even know it. And it's so challenging trying to convince a potential homeowner, okay? Trust me, I'm the professional and I do this all the time, every day. Now is your time to make your offer and for it to make sense for you and your family, because that's really what it boils down to, is
That's all that matters.
putting families into homes, right?
Like, forget what your neighbor did, what your uncle did, what your mother did. What is going to be the impact for you and your family right now? Does this make sense for you? And that's all you need to worry about. That's all you need to worry about. I sent you all a text this week, my Monday motivation, talking about not everybody's going to be around. Just about mindset. I talk about mindset a lot, and
Yeah.
Martin touched on it. Just well said on the divide and mindset talk track. If you want something that you never had, you will sacrifice something you've never done in order to get it. So I second that. Martin actually just moved here. Well, actually, he hasn't moved in yet. Just bought a home, coming from New York. Him and his family bought a home here in Charlotte. So congratulations to you. And before I move on, I want to say happy birthday to Benita. It's your birthday today. Happy birthday. I don't know if you're watching or not, but happy birthday. Another thing I want to talk about is fairness. A lot of times I talk to some clients and they talk about the housing market is not fair and everything like that. Look,
Life
we
isn't.
exact life isn't fair. I tell my 8-year-old daughter, if she wants fair, it happens once a year in Raleigh, and she can go visit it. She can go play. That's that. But life isn't fair. But most people don't realize, like, I can't. Well, actually, I do. I can't speak for you all. I know your upbringing. I come from a marginal upbringing, and the people on the margins, life is not fair. It's what you make it. You got to take advantage of your opportunities and get in where you fit in, and create a way until you make it in your favor. Nothing's gonna happen for you. You got to push and pull sometimes, and that's what this market is right now. Yes, interest rates have gone up. You couldn't compete when interest rates were low and everybody and their mother was applying for a property, trying to apply for a loan. You couldn't compete there. Interest rates are higher. Less people are trying to buy a home, so you don't have much competition. So this is where you can get in. And I want to talk about the conforming loan limits increasing and what Powell said, because I believe, because what I'm seeing is, coming into the spring, there's going to be a lot more competition in the market again. So the people on the margins that can just barely afford it, where you're paying the same amount in rent and all that, is you're going to be left out in the cold again if you do not act or do not seek wise counsel. That's my biggest thing.
When you
Sorry,
say
Sahaad, I think I muted you.
that is so important, because the wealthy can afford to wait, right?
Yeah.
Let's just put everybody that's in the chat and everybody that's going to go back and watch this, think about it. If you have an unlimited amount of money or you're wealthy, you can afford to wait this out. You have the most options because you don't have to move if you don't want to. For families that are not in a position where you can afford to wait and you are essentially a slave to the landlord, okay? You have to take advantage when it's the best opportunity for you. When you say wise counsel, that also goes into the professional element of this industry, right? Ortez and I joked about there being blood in the water. And I said to him, well, they should know how to swim with sharks because I'm a shark. Mortgage companies are going out of business left and right. Realtors that came into this industry 2 years ago when the industry was hot, everybody was buying, it was just a free for all out here, right? There are industry professionals here that are now finding out what it means to be a professional because that's what we're in. We are in a season of professionals. If you do not have the appropriate representation, you're going to be lost out here. So be mindful of who you seek out for wise counsel. Nobody on this live, there's no rookies here, right? Everybody on here has probably got a decade or more in their industry and in their background. So be mindful of who you are choosing to advocate for you through this process and be ready to listen. Listen to the professionals that you hire. I cannot stress that enough.
Go ahead, Ortez.
And I think I'll give everybody that's listening right now, and that's on the playback, a little free game. Get on the ride right now. Because the thing is, everybody on this live knows what goes up must come down. And if you're not on the housing ladder, you're never going to get on the housing ladder. So I think the biggest misconception with a lot of people, first-time home buyers or home buyers in and of itself, is that the home that they buy is that last home. On average, ladies and gentlemen, you're either going to refinance or move within 5 to 7 years. Oh, that's average on how we take applications based on what we see out here in the world. So an interest rate, you date a rate. Actually, you might even date a house, depending on your situation. You might have 5 kids. Then all of a sudden your kid's gone away. They're off to college. Now you have this big house and you're moving. Like, you have to think about the future happening. And when the future happens, situations and circumstances change. I ran into a client who purchased a home from a seller who had just recently bought the home a year ago. And that person had to upgrade their situation because of like some family issues. Now you got to think about it. That person probably bought that house thinking that was the last house they had. But the cool thing about life is it happens and you need to be prepared for it. And when you're buying a house, getting in when there are, like we always say, like the competition is low. Yes, the rates are high, but get a house. What you're going to do now is then build equity. You're going to have an interest rate that you're probably going to refinance within the next 3 to 5 years. So does it really matter? Yeah, it might hurt. You might have to tighten the belt on that pants there a little bit. It might be some days you might have to eat ramen. Okay. Well, guess what? You're going to build wealth. And then eventually, if you have to upgrade to that property, you have equity that you can pull from that sale to do so. But these are the lessons that people in our industry see that most people don't think about. So that's just a little game for everybody who's listening. Like the house that you buy, like, hey, even if you built the house, 9 times out of 10, once you've lived in it, you're going to find something wrong with it. And it's technically not going to be your dream house. So let's get that whole idea, kind of put that to the side and get something that's comfortable for you and your family. So that way you can build generational wealth. That's probably the most important thing.
Now, one thing I can say, you hit the nail on the head, is that first house you buy is not the end all be all. Millennials, Gen Z, we think we want everything now. We think like this is it. Like this is going to be my dream home. No, you're going to be paying for housing. You're going to be in this area for the next 3 to 5 years. You're going to be paying for housing. You might as well get something from it, whether it be forced equity, appreciation, you paying down the mortgage, or when the housing market, because it ebbs and flows, right? But traditionally, it always goes up. You get appreciation just based on time of you having it. you're going to be paying that what right now rent is at least $1,500 a month, regardless.
Where?
You can get a studio. You can get a
Where?
studio.
Yeah,
Yeah, it's about
okay.
2,000. It's about there was an article last month in Charlotte where they're saying the average rent here is at least 2,000.
Easy.
Yeah, yeah. We had a question real quick before we talk about the conforming increase in loan limits. Janet from Los Angeles. I spent some time in Los Angeles. I love Los Angeles. My daughter was actually born in Cedars-Sinai. Los Angeles has a special place in my heart. So, NACA and USDA loans. We have a couple videos on this channel talking about USDA loans. Actually, I think you might have done one with me, Ortez, talking about USDA loans. And NACA, I'm familiar with the program.
Ortez.
I'm familiar. Any of you want to talk about it?
Well, as a man who used to do those loans, I mean, it's a wonderful program. It's a great starter program for somebody who, like, the person that it's most beneficial for is for, like how we said, the marginalized folks, people with little to no money, who need down payment assistance, those things like that. But for anybody outside of that scope, it's not necessarily overly beneficial for them. Could it help? Sure. But as far as those individuals that fit into that category, especially low to moderate income families, that's where that program shines the most. And I know they have a website, NACA.com, and I know you have to do like a home buyer seminars in order to get into the program and things of that nature. But you can get more information from that website. And if I'm not mistaken, the Los Angeles LA does have an office, because I think she's from Los Angeles.
Yes.
They have an office in LA, last that I remember when I was there. But I mean, it's like I said, it's a great program for low to moderate income families. And then with USDA, like you said, we talked about it, but the biggest thing is, if you don't mind living out in the sticks, that's a perfect program for you too. So, it's not for city living folks, it's for people who want to be in rural areas. So that's an option. If that's something that you're willing to look into, then by all means, that's a wonderful option for those individuals. Yes, Sahaad.
Go ahead, Sahaad.
I gotta say this. So when I hear borrowers ask questions about NACA, USDA, 100% financing, I'm not sure who asked it in the comment, but I'm just gonna say this, and I want everybody to receive this. Down payment assistance is to assist the money that you already have, okay? If you are in the market looking to buy a home for free, I don't want to put down a down payment. I don't want to put any closing costs. I want somebody to pay for this. I need to get a grant for this. Let me tell you something. You might qualify for a lot of things, but what are you going to have to go through to get them? How strong is your offer going to be? Are we going to be taking blood from a stone in order to get you through this program that you so desperately want? Or are you going to have to live 3 hours from where you wanted to live because you didn't want to save money to put down a down payment? Now, that's not everybody, okay? But when I hear borrowers say, do you have any down payment assistance programs? Let's be very clear. Assistance is to assist the money that you already have. If you come into this home buying process and you tell me, one of the first questions that I ask in a consultation is, how much money do you currently have saved up to purchase a home right now? Right now. And if your answer is, I don't have any
people
money,
start hesitating.
Yeah. No, it's one of the first questions. You want to know why? Because if you came into this process and you said, I'm buying a house, and you haven't done nothing to start. If you can't do anything else right now, you know what you can do? You can start saving. You have no idea where to start. But you know what we absolutely know? That it costs money to purchase a home. Just start saving. And then we will advise you on everything else. So how much money do you have to purchase a home right now?
Yeah.
How much do you have access to? So Trent, if those programs are for you and you qualify for them, if they fit your needs for your family, more power to you. We're going to walk you through them. We're going to advocate for you. But if
Yeah.
you're looking to buy a house for free, it's going to be a long road. A long road.
So I must add on that. So you all are the money people. I try to make the offer look as good as possible, right? So when you have down payment assistance and when I'm pitching it to the other realtor for them to give to the seller is you have to look at the market. If you're going to want NACA or USDA loans or 100% finance loans, if that's the way you want to go, by all means, go for it. But no, now situations like this, environments like this is the best time to act when there is little or less competition amongst buyers. Because as soon as that seller sees your offer, this is most sellers, it's a generalization, see your offer, you have to put what kind of loan you're getting, right? NACA or 100% finance, and they have a conventional offer, and they're both, even if I've seen people, I've had sellers myself, take the lesser conventional offer to not have to deal with the bureaucracy of NACA. So
Right.
that's something you have to understand, to where if there's competition, you might just be SOL regarding that property. And now is the time when there's less people on the market to move forward, even though interest rates are higher. And that means you already run the margins. That means you can even afford less of a home. Might not be in that neighborhood you want because interest rates are higher.
Yeah, I just want to, because I just saw this question out of the corner of my eye, and it's kind of like when we were talking about
Which
as far
one?
as money. How much money should you have saved up? Rule of thumb that has never done me wrong. Is typically anywhere between 8 to 10% of whatever the home you're about to buy. That saves you from any potential tax issues, any anything that could possibly come up. 8 to 10% is kind of a safe bet. So for every 100,000, 8 to 10 G's, if that makes it easier for somebody to break it down. For Ronald, I think Ronald Knox asked that.
Yep.
But
Ronald Knox Jr. Thank you.
Yeah, no problem. But yeah, folks, just to piggyback on Sahaad, if something, like, what's the old saying? If it's easy to get, then it ain't worth having.
That's
So
the truth.
buying a home, there's always a cost associated with it that you should be prepared for, right?
Might cost you your peace.
So while you touch on that, while you say that, you're joking. However, home buying is an emotional process, a very emotional process. You're going to feel every emotion in the book. Real quick, shout out to Danny. Thank you for the $5 super chat. If you're not familiar with Touring the Carolinas with Danny Mullen, he is a team member of mine. Excellent guy, upstanding professional. If you have real estate questions, please reach out to him. I'm trying to get him on camera. He's a little hesitant right now.
That's gonna be like pulling teeth, man. I could barely get a picture of him with that one closing. Remember?
2023, we're gonna get it. We're gonna get him on camera. But he does have videos walking you through homes and just sharing the process with you. But real quick, the emotional side of buying a home. You're going to feel every single emotion. And now, advice to other real estate professionals, agents, you know that there's going to be hiccups in the transaction. No transaction is smooth. In my opinion, it is your job, and I'm talking to other agents because you'll make my job easier if you did this as well. And the mortgage broker's job is, if you are calm and collected, do not raise red flags when they're not really red flags to your client, because a lot of people, we do this every single day. Not everybody's buying a home every single day. They may buy 2, 3, maybe 5 homes in their lifetime. And if you have an issue with an appraiser or something like that, just like how I picked that example out of nowhere, Sahaad, if you have an issue with an appraiser or an appraisal, it's not your job to cause the client to have a panic,
Stress.
to stress. You can go behind the scenes, talk to the appraisal, talk to appraiser, talk to the other professionals, smooth things out, and come to your client with a solution, as opposed to stress. They're already stressed enough. They're moving.
Mhm.
They're moving not only themselves, their families, and a lot of times they're moving states, changing jobs, coming up with payment. So it's not, as a real estate professional, we are supposed to be here being calm, cool, and collected, and your advisor should be doing that. If they're adding more stress to your life, that's any of my relationships, you all can attest. If you add stress to my life, you're just not in my life. So that's how I feel.
I know how we work together and how me and Ortez work together. And there is no perfect transaction, but a good transaction is one where the borrowers, the client, any type of fire drills that happen, you don't know about them. Because I'm so good at my job that I have addressed every person that I need to address. I'm not alerting you unless it negatively impacts you, unless we have a delay that impacts
Mhm.
you, unless it's something that I'm going to need from you. And even when that is done, it will be done with respect and in grace. At a time that's comfortable for you, hey, we have to have a conversation. Set aside some time for this, but there's a few things we need to go over. There is nothing worse than a client who's panicking because there is fear that you've never done this before, right? My job is to make it less scary. If somebody needs to get barked at, I'm going to do it. You're not even going to know that it happened. Or if sir has to tell me something, hey, this, and this is happening, commotion, that's not for you. That's why you hire us. This process is smooth sailing. When things start to get complicated and either side is trying to do the other's job to support you, it makes it really difficult. So, one thing that I love about working with Sir Ashley is Sir Ashley stays in his lane. He does not come over into mortgage world and bother me about mortgage stuff because he's the realtor. I don't know anything about houses, neighborhoods, what you should offer. You got to talk to Sir. I stay in my respective lane. And we come together to support you because when done right, you have two powerhouses, or Ortez, you have two powerhouses that are here to support you, to cover you and shield you when you don't even know that there's stuff going on, right? I don't have a real estate license. I am not a realtor. That's not my license. My credentials are in money. That's all I'm going to talk about is money and nothing else.
No.
When
Go
done
ahead,
right,
Richard.
you're not going to know that
Yeah,
there
and
was a
that's
problem if there was a
and,
problem.
and I can second that because I have a very motto that I tell all my clients: no news is good news. If you don't hear from me, just keep doing you, smile, pack whatever box you have to, because I know trust me, I've moved across country 5 times and I know how stressful it is to move from the south to the west, down to the east coast, things of that nature. What you want is a professional who is basically gonna guide you through the process and not make it nervous. Like if I sweat, then I shouldn't be doing my job. But if I'm doing like prime example, I'll just share a quick story. I had a listing agent, sir knows about this transaction, a condo, which was supposed to that accepted VA financing, that was not on the VA condo list. Now, for those who don't know, any condo for the VA, it has to be VA approved. Let's just say on my own, I made that condo the second condo in Charlotte to be accepted by the VA. Did I worry the client about it? Nope. Did it delay the process? I think it was like a day. I think it delayed it a day because of how long it took the VA to approve it. But I didn't call the client stress. I just said, hey, they made an error. I'm going to do my best to do my job. And if I get it done, we get it done. And sure enough, I did. But the thing is, I didn't impart fear. Oh, and this was also Danny. Danny, you're welcome, Danny. But
Yeah.
this also is something, because there's this thing like with us as mortgage professionals, unless you really, I'm talking about, you have to seriously mess up the process in the process. Like you yourself have to really mess it up for us not to be able to fix it. Because that's our job. Our job is to find creative ways to make sure your loans go through. So no news is good news. Like you'll be amazed at how many deals I could probably attest for Sahaad that we did something that the client has no idea that we did, and they just signed the
Every
papers
day.
off. It happens
Every
all the
day.
time. So don't, like, we already know how stressful the process is of buying a home. So if we're not stressed, you shouldn't be stressed either.
Yeah.
No, excellent points. Excellent points. We have quite a few questions. I need to catch up a little bit. One person thought 20% down. No, that is not the case. That's not the case. You can get a home with, as well, there's 100% financing, but you can get, what's the least amount down payment for loans?
3.5 on a FHA.
Yeah,
So,
and then 5% conventional.
Yep. And then,
okay.
Oh yeah, 3%. Well, it depends on, if it's home ready or home possible, but yes, 3. And then probably the other 5% for closing costs, roughly, give or take.
So no, it doesn't cost as much as you think to buy a home. You don't need to put that much down. 3%, 3.5%. Conventional, you can go 5. But we want you to have reserves. We don't want you have your life savings and put it down to the down payment, because buying a home is a responsibility. Things are gonna happen. Like, it's just gonna happen. You can buy a brand new home. New homes aren't perfect. They're new. They're not perfect. So just know we don't want you to spend we want you to have this money in savings. Couple questions. So, Rochelle, you're ready to buy, just waiting on the market to drop. These prices are way overpriced. Now, I don't know where you are. If you leave a comment, let me know where you are. Now, I'm a nerd, not gonna lie. I study the market. I study the nation. Obviously, I'm in the Carolinas. I have a keen interest in the Carolinas. When you hear about these national price drops and everything, I can say this: there are severe price drops out west. Everywhere else in the country is staying pretty level. But there is severe price drops out west, high cost areas, Silicon Valley and whatnot. And that, because we're talking $1 million properties selling for, 900, 800, that skews it to where you see, okay, home prices are going down crazy amounts, when actuality, nationally, home prices have only dropped 3% since the peak of this summer. And based on what we're going to get into in the second part of this video, talking about loan limits and the increase in mortgage applications the past 4 weeks, I think we're going to hit a floor. I don't think it's going to come down as much as people hope they come down. My recommendation to you is find something that's comfortable as far as mortgage payment for you and move forward. Find a home that works for you, that a mortgage payment works for you, and move forward. Because you waiting, especially, I'm not sure if you listened to Jerome Powell speak yesterday, but you waiting might not be the good look.
And let me just chime in just one thing, and I kind of like feel her pain, because I talk to you often, Sir Ashley, how houses were purchased 2 years ago at $400K, now they're selling for $7. It would platted. Like it mind you, there's no upgrades. It's the same kitchen that they bought outright. And I scratch my head, because that is partially criminal, but by all means, go ahead, sell it. If you can get it, great. But I just always tell him, like, man, look at this house. Does this equate like
he sends me Zillow links, and like, look, nothing happened. They didn't change. This is the original photo, and they want $300,000 more, and they bought it 4 years ago.
Just to calm me down, because I'm just like, I don't, God bless y'all, seller, if you're listening and you get it, God bless you. But I just don't see the justification unless you drop like a pool in there, you put in like a chef's kitchen, something.
It's all about supply and demand. Right now, the truth is there's just not enough homes. And during the what 08, 09, home builders literally stopped. And back in 2018, 19, 18, sorry, home builders paused for about a good 16 months there. So they weren't building to where you had this glut of inventory to where home prices could kind of level off when everybody wanted to move. And we're still in the same predicament. There's just, while yes, you see home prices leveling off, that's because a couple reasons, I believe. A lot of people that want to move, that own a home, they want to sell, they want to upgrade or downgrade, they realize that they have a 2 or 3 or 4%, interest rate. So they're like, do I want to get rid of this? Do I want to sell and pay $400 a month? Or am I perfectly fine with this 2, 3, or 4% interest rate? So that's just keeping a lack of inventory. And since interest rates have gone up, builders themselves have stopped building as fast. And the inventory they do have, that's why you're able to get deals, they're discounting to get off their books, especially at the end of the year.
And be writing off whole communities.
And another thing I've seen is it's not happening as common in this area, but builders are selling whole communities to investors. Like literally just whole communities to investors. They're like, you know what? We don't even want to deal with this, play this game with buyers if they want to buy or not buy. We'll just sell everything right now.
And then those new homes turn into apartments.
Exactly. And then what's going to end up happening, this is just what I see, and I don't want it to happen. That's why I'm a huge advocate of owning and buying and purchasing, is just a nation of renters. Everybody's going to be trapped because you're not going to be able to save because you're paying $2,500 a month in rent and whatnot. And then home prices keep going higher and higher. So that's my biggest concern. Like, get in where you can fit in, and then grow from there. That's what I say.
The danger in renting is like rent is not going to go down. Like the only thing we know for absolute certain is rent is going up. Try to refinance your rent. Try to go to your landlord and negotiate better terms. It's not happening. It's a guarantee.
Actually, a client that we spoke to today, reason why she's looking for a home is because the landlord came to her and was like, hey, we're increasing the rent $400 starting the new year. So, and he already said, I'm perfectly fine if you can't move forward with that. I have somebody that will. So they're not concerned about you. At least
they don't care.
No, at least like if you own a home and have a 30-year fixed mortgage, like, yes, we complain in America about interest rates going up and all that, but we have something that a lot of countries don't have: 30-year mortgages. You can buy your home, have a 30-year mortgage, 15-year mortgage, and it be the same. It might fluctuate a little bit because of taxes and insurance, but relatively be the same. You're not going to fluctuate $400 in a year for that entire time. You have Canada and Australia, where the most common loan is a 2-3 year ARM. So you see a lot of those countries going to be it's already happening in Canada and Australia right now, where a huge mortgage crisis. Whereas here, you got 30-year debt.
Yeah. And you can extend it.
You can extend it, yes.
Right.
Solar panels.
Let's go back out to another 30 year.
Solar panels. I'll touch on this briefly. In North Carolina, they don't really add value to your home. It has to be like a particular thing you want to do. Now, other parts of the country that could be different, but at least in the Carolinas, we haven't adopted solar panels as I feel like we should. I had solar panels on my last home. I have an electric vehicle, so it was paying for my gas. I have not gotten solar panels on this home. I plan on it, but like anything, like you lady before said, she's waiting on a deal. I'm waiting for this recession to start so I can get a deal on my solar panels. So yeah, but no, I'm going to get it just because it makes sense for me. It's a personal choice, not so it's necessarily going to add value when I try to resell the home. Due diligence. What are you all seeing? Now, I can tell you what the due diligence I'm seeing as far as my clients and my teams, but you all, due diligence, what are you all seeing for due diligence fees nowadays?
Well, they're not crazy like they were 6 months ago.
Yeah.
And the terms are better on due diligence. Like the due diligence period are reasonable now.
Yeah.
And depending on the state, so North Carolina has due diligence, but in other markets where we don't have due diligence, we just have earnest money deposits. Even those have kind of people have simmered down.
Yeah.
Right? Sellers want offers, so you can take this little $1,000 that I offered you, or whatever, whatever
Yeah.
it is.
Yeah.
The lowest
I
one I
can,
seen lately was $500.
yeah. No, I remember when due diligence was like, well, one, I'm an investor. I used to not put due diligence in my offer. It just was what it was. This was what, as late as 2018. Um, but right now, what I'm seeing in due diligence is I've seen $800. I've seen $1,000. I have a listing right now that is sitting on the market. Yes, it needs some work. We're seeing about anywhere from 1,000 to 5,000 in due diligence. It's nothing crazy. Like before, I had a client in the past 2 years put down. I don't recommend anybody doing this, and I didn't recommend he did it. He do it. Put down 100,000 due diligence. Yeah. So no, it's not crazy. It's not insane anymore. You can definitely get by with $1,000. And if it's, I will say this though, if it is in the thinking of the Charlotte area right now, there's about 5 areas in Charlotte that has excellent schools, like all the way through, like between elementary, middle, and high school, excellent public schools. In those 5 areas, if the home is move-in ready and done up, yes, you are still going to be putting in significant due diligence because everybody wants to be in that area because they know schools are amazing and the house is ready and they're willing to sacrifice and do that. But aside from those 5 areas, you can get away with less due diligence. Do you do the Florida market? Are any of you for mortgages?
I do.
Okay.
I can do Florida.
So yeah, I will Ortez, if you don't mind putting your information in the comment section, and I'll also put it in the description below. Reach out to Ortez regarding mortgages in the Florida market. I am not licensed in Florida. I can put you in contact with a real estate agent that is, and that can help you in Florida. Just reach out to me. My contact information is in the description as well, and we'll put you in contact with somebody. The Florida market is huge, so you obviously have to know what area of Florida. But yeah, no, we can definitely help. What's going on, Kenya? Thank you for watching. Yes, you can listen to the beginning of it. This will be recorded afterwards and just come out like a normal YouTube video. Now I want to touch on while I have everybody here. If you're here and have not hit the like button, please tap that like button and share this with your friends and colleagues. It definitely helps us out. And I want to touch on the second part of our conversation, talking about the increase in conforming loans. What does that mean? Conforming, hold on, I have an article. Can you share with Sahaad, can you share with us what that means while I try to mess around with this computer?
So a conforming loan limit, what that means is that this is the maximum amount of money you can borrow to where it's considered conforming. What that means in mortgage world is that this loan fits the standard parameters of a traditional mortgage. That is what conforming means in a so that it's understandable. Your loan can be this much and you're still in a traditional mortgage, nothing out of the ordinary here. We'll let you go this high before we're going to break out a new set of rules because you're borrowing more money than the limit we have placed. So that's what the conforming loan limit is. Once you get over the conforming loan limit, like I mentioned, there's going to be a new set of rules and a new set of criteria for you to receive financing because you are borrowing so much money.
No, I appreciate that. Thank you. And the reason why I think this is a not necessarily a game changer, but it will set a floor as far as how low prices can go, because the highlighted portion here, I'm not sure if you all can see it. It says the national conforming loan limit for 2023 for a one-unit property is $726,000, $26,200. So that is for one unit, the loan limit. And that means you can put down as little as 5%. Am I correct?
Yes.
So yeah. So basically to help people out, right? By it being 726, it basically increases the floor, or should I say the ceiling, before you get into what's called a jumbo loan. So maybe people have heard those terms, conventional or traditional versus a jumbo, right? And what that does is, and kind of some of the rules Sahaad was talking about, is that significantly changes what you have to put down to even get the house. So by them increasing this limit, it gives, I don't want to say like, it gives everybody the chance to have, like, as you can see, almost $750,000 for a home, which is unheard of, because if I'm not mistaken, like 3 or 4 years ago, maybe 5, it was at what, 480. I think that was what it was for a long time. And then to see it jump to, I think it says 329.3. I think that's the number. And then it actually creeps over to, once you become into a high cost area, it goes over $1 million. So I think it's like $1,090,000 or something like that, right? So what that does is that allows people who normally would have to take out a jumbo loan to now get a conventional mortgage where the down payment is lower, the DTI criteria is lower. So that changes that puts a lot of people that wouldn't have been in the ball game in the ball game.
It puts you in the ball game, because that $700,000 property, as opposed to coming up with 10% or 20%, you can come up with 5%. You can afford that now. So
Yeah.
that's why we talk about prices coming down, and I don't believe they'll come down too much, because now you have more people being able to afford higher priced homes. So you're having more players being able to pursue that limited amount of quantity of homes.
Yeah. So basically, in a nutshell, it's like now a person can go purchase a home for 765 roughly. My math is like, I know I'm close. $765,000, right? And somebody can bust out the calculator and do the math, but I know I'm close. So like $765,000 house, you can now do 5% down on that house, where just a little while ago, the only way you could do this, at minimum, you had to do 10% down. So and I'm just going to do fast math. So if we're $765,000, 5% means that your down payment is $38,250. So let's just call it 40 grand, right? So you just went from having to do a down payment of 80 grand to literally cut in half because of these conforming loan limits. So people that are purchasing homes, specifically here in the Charlotte metro area and certain parts of South Carolina, a $750,000 house is very regular. This is a big deal for people moving to the Carolinas that maybe couldn't do an $80,000 down payment. And that's not even including your closing costs. But that's a lot of money that now can be put towards something else. And quite frankly, if you're buying a house that's almost $800,000, you got it. Okay, you can afford a slightly higher payment if you're buying a house at that price point. But having the option to not put down such a big payment is phenomenal for families that are moving here, especially to Charlotte and certain parts of South Carolina. There are so many communities here in the Carolinas, $700,000, $800,000, $900,000. These are regular prices for homes in Charlotte Metro.
Yeah, and I just left the Charleston area last week. I had a closing there this week actually, and there's a huge community called the Nexton community. 10,000 homes, you all, 10,000 for the next 9 years. They're going to be building out there. They have actually a couple communities, and yeah, the average home is right around that limit, 700, 750, right around there. And another thing that I really like about this is, now, granted, you have to look for multifamily. They're not as common as they are up north, but multifamilies do exist in the Carolinas. Look at the limits here for multifamily. That 726 was for 1 unit. Now, if you have a 2 unit, you go up to 929. If you have a 4 unit building, you have almost $1.4 million as your loan limit, and you only have to put 5% down.
And if you're FHA, well, FHA is different. Actually, scratch that completely. But because they have different limits. But if
it's
you
not
can
that much
get a
off.
multi-unit,
It's not that far off.
no, it's differs on county. But if you can get into a multi-unit here, right, and you can do as little as 5% down, do you know how big your ROI, your return on investment, that's what ROI is going to be if you are anywhere near Charlotte, North Carolina?
Absolutely ridiculous. It is such a game changer. You'll be living there for free.
Yeah, because you can house hack. You can house hack that thing all the way till the sun come home.
Exactly. And you talk about generational wealth, it's about getting on the property ladder, talking about getting it and never letting it go. That's why it's hard to find multifamilies, is because investors have them and they're never going to give them up now.
They're cash cows.
Exactly. I had a question regarding, where we at here? Regarding the Concord area. It depends. Asking about, so the question is, thank you for this information. Hello, Donald. Appreciate the question. Is the Concord area of Charlotte considered a good school district? It depends. You have what? You have Mallard Creek High School over there. That area, there's a Highland Creek, Highland Park, Highland Creek. I get the two communities mixed up. Whatever the big one is.
Though. I think that's still in Charlotte because that's above 485, isn't it?
Part of it is in Cabarrus County.
Okay.
It covers up. It's a golf course community.
Cox Mills, that area.
Yeah, Cox Mills, exactly.
They have good schools. It's an elementary school over here on Pitt School that's really good, and then I think it's another down Pitt School. So kind of like right as you get into Concord on the south side, they have some pretty good schools. I'm not sure what it's like going up to towards the Kannapolis area.
Don't do it.
Okay, I didn't know. So
Donald, listen to Ortez. Cox Mill, Mallard Creek. Yes, Cox Mill is a very good school, actually.
Very good school.
Lamont Jordan. He's a Hoya. He helps out with the basketball team. So thank you, Danny, correcting me. Half in Charlotte, half in Concord, Highland Creek. Okay. I knew it was Highland Creek, Highland Park. I was drawing a blank. Is the Raleigh market similar to what's occurring in Charlotte? Yes, in the sense that prices have skyrocketed in the past 2 years, 3 years. Raleigh is taking more of a hit right now than Charlotte is. It's still up significantly year over year, but you're seeing more of a softness in the Raleigh area. Right now, you see all the tech companies laying people off, and Raleigh is a huge tech hub, has become a huge
Mhm.
tech hub. So it's a little bit more softness in the market, but prices are still compared to when I was in the area in 2006, 2009, they're outrageous compared to then. And yes, Kenya, you would know. Your son went to Mallard Creek. Yes, Mallard Creek is a good school. Any other questions regarding mortgages? What's going on? I really wanted to talk about the updated loan limits. I know we touched on it a little bit briefly, but I think it's a huge opportunity for people that want to be able to act swiftly when the year turns, because come springtime and summertime with these new limits, I believe you're going to see that much more competition in the market. So I say act quickly as the year turns.
Also, for conforming loan limits, what this means is if you're a person that you know you're going to be in the jumbo space, or you're going to be purchasing a house in these higher end, over $500,000. If you know this is your market where you're going to be buying a house, right?
Real quick. Now, real quick, the 500,000 is just about average here in Charlotte. Now, the median home
Wow.
price right now is around 400,000. Half a
Yeah,
million, you're right there. If you want that foyer, you're going to be in a 500,000.
yeah,
So I'm sorry. Go ahead.
yeah. So if you know you're going to be well over $500,000 in purchase price, right? What the increased conforming loan limit means for you and your family is that you may be able to qualify for a lower down payment at 5%, get a more aggressive interest rate at 5%, okay, and have less stringent credit requirements now at 5%, right? Because you're back into a traditional mortgage, right? Jumbo world, it sounds good, but let me tell
Yes,
you what comes
you don't
with
want to be
jumbo.
in jumbo world.
Jumbo comes with your credit has to be good, really good, okay? And just to clarify, let's talk about what good credit is. 700, you got fair credit, okay? 700 is fair. 750 and above, that's our excellent realm. Those in the jumbo space that are seeking out special jumbo financing, most aggressive, lowest interest rates, they're 750 and above credit scores. So if you know that that might not be you, you need to seriously consider a traditional loan with 5% down, because there's going to be less restrictions because it's a traditional loan. Regular guidelines. Nothing fancy, nothing to see here. You qualify for what you qualify for based on the traditional loan. Jumbo is a different animal, and everybody is not built like that. And it's okay. It's
Yeah,
okay.
yeah,
All right.
yeah.
It is okay. Nobody has to know but your loan officer and you guys. Mhm.
Now, real quick, I like to say I appreciate you 42 people watching right now. I know you could be watching Thursday Night Football, the Bills Patriots right now. So I appreciate you rocking with us tonight. Thank you. Uh, Question is, are we expected to see interest rates drop again soon? They've been on the downward trend the last 3 weeks.
Um, I guess my analogy is, am I expecting my daughter to clean up her room? Yeah. Am I gonna bank on it? No. So I'm gonna, as somebody who's trying to borrow money, as I said it at the beginning, put yourself in the best position financially possible where the rate doesn't matter. Because if you're gonna rely on the rate, you probably await. Like I always say, if you're relying on the rate, what happened when the rates were 2%? What did you do? When they were
Nothing.
3%, what did you do? When they were 4%, what did you do? So who's to say when they come back to 4%, if they ever do, are you going to move? Are you going to act on it? So I mean, I understand. Like, I would love if I could have a genie in a bottle and ask them like what the rates are gonna do, so we can be like, so it make our jobs easier because then we could pitch lows with super confidence. Like, okay, yeah, we'll float this rate until next Tuesday. You know what I'm saying? But no, put yourself in a position financially, like I said, to whereas the rate doesn't matter because you're only dating the rate. That's it. You're gonna refinance it at some point in time. Period. So don't get hung up on what the number is. Get into the house. We'll figure out how to refinance you later. It always happens. Look, and then let's put this myth out here. Nobody almost ever pays off a 30-year mortgage. I know one person, and that's my grandma.
Right.
Nobody pays off a 30-year mortgage. You either refinance it into another 30-year mortgage or you move. Period, y'all. So the number that's on that interest rate, you make a mortgage payment. Like Sir said, find a mortgage payment that's comfortable for you, not an interest rate.
Yeah. Treat it like your car. Like if you have to commute to work and you drive, treat your house like your car. If your car broke down tomorrow, okay, and you had to get your kids to school, you had to get two back and forth to your job, and you went into the dealership and you didn't get the most favorable terms on your rate, guess what? You were still leaving with a car because you needed one, right? Because you need a car. You need a house. So as long as you can afford the payment, get your house.
No, that's the truth. So Sheila, real quick, if you didn't, I'm not sure how long you've been watching. Is it a good time for new construction? Yes, right now it is a great time for new construction. We're headed toward the end of the year. It's always a good time to buy new construction toward the end of the year. And it's even slower now than it has been the past 2 years. We're about normal to 2019, which if you asked anybody in 2019 if they thought it was a good year or bad year, they would say it was a good year. But compared to the last 2 years, we're significantly less as far as sales. And I've been making disrespectful offers, I said it earlier, to builders, and we haven't been getting those accepted, but they've been playing ball and negotiating to where I had a sales rep come to me. She had to get approval from the VP of sales in Charlotte to approve this price. And she was like, we hadn't sold a house at this price in the last, I think she said over a year, last fall. So we're able to work stuff out right now. So reach out to me. I know we've talked before. Reach out to me. We can talk and see which community. And every builder is not the same. So some builders build a whole bunch of spec homes that they need to get rid of. Others don't. So this doesn't apply for all builders, but we can see what works for you. I know y'all have been here for an hour. Give me 5 more minutes of your time, please. I know y'all both have lives. But I do want to, who wants to answer this question? Are we ever going to see home prices built from the ground up for 120 again, back like 2015?
I'll be dead in my grave before we see it.
I don't even think you can get lumber for 120K. Like you can't even, like, I'm sure just from logistics alone, it's going to cost you 120K probably just to get the concrete from down the street. So like it's
not in Charlotte. How about we be more specific?
Yeah, I would say, not in the Carolinas, because I look around South Carolina, and you can get in the twos. You can get mid twos right outside Columbia. Now, it might not be in the best area, but you can get in the mid twos. You're not getting 120. That's not. I'm talking about like a stick built home, not a modular home or anything like that. Like a stick built home. Yeah, that's not happening. I think that's it. Do you know anything about the Houston market? I do not. And no. I was going to say, I know people in Texas, but none of the agents I know are in Houston. They're all in the Dallas or Austin area.
I know no one said it on here, but if you know you have to wait like a teeny tiny bit and you know that you are not going to be buying a house in the next like 90 days, start your process right now. Start saving right now. Like if you can't do anything else, you're not gonna be in a house in the next 90 days. If you can do nothing else, please just start saving. Just start saving your money. If you want to do a consultation on your credit profile, you can do it for free at a housing counseling agency. You can have a lender pull your credit report and we can review it in a consultation. But you have to start getting prepared, because that's the only thing that's going to get you into a house if you're not prepared. You have to start now. So if your goal of being in a house is, I want to be in the house by the summer, or I want to be in, by before the holidays of next year, you need to start saving now, right now. You need to start getting really serious about what your budget is and looking over your debts. If you join my YouTube page, I'm going to do the mortgage diaries for myself because I'm getting ready to buy a home. And guess who hasn't been home buyer ready since the last time they bought a home? So I know I'm not buying a house for at least a year. I need to get prepared right now. You should too. Start saving immediately.
No, thank you for that advice. Thank you for the super chat, the mortgage boss. Joy, thank you. I have a question regarding, so this is something I wanted to do a video on. I haven't done it, obviously. Took like a hiatus from YouTube. I've been very busy. And I just needed some personal time, right? Insurance rate quadrupled along with taxes. Does North Carolina fluctuate like that? No, they do not. And insurance in Florida is an absolute nightmare. So many companies have backed out. I think you only have like two options right now in the whole state as far as insurance, and it's just sky high. And I'm going to do a video talking about why Floridians need to move to the Carolinas and why Texans need to move to the Carolinas, because one, Florida insurance, you're getting killed, and Texas, your tax structure, property tax structure is absolutely horrendous and can fluctuate. I know I mentioned earlier that your mortgage can't fluctuate $200-$300 in a year. Well, that's in the Carolinas. In Texas, based on what they're building out and everything like that, it can fluctuate $100-$200 a year based on just how they calculate taxes that year. So
now hold off there, sir. Don't tell everybody to move here because they haven't fixed I-77 yet. So at least let them fix I-77, because we can't have too many more people not knowing how to merge on the I-77. We can't.
Oh my gosh.
Okay, so tell me, at what point did I say it was a lie about I-77?
There were no lies told.
There's no, I have to extend it to what, 85, 485, 277. 277 is the worst. Around uptown. Yeah.
And this is also coming from people that are like, if you don't live in a heavy traffic area, right, you're going to come to Charlotte and think that we have traffic. If you are a northerner and you're coming from anywhere up top, New York, Jersey, Philly, Wilmington, okay, this is light. This is not real traffic, okay?
That is true.
The complaints are, it took me 30 minutes to get from one side of Charlotte all the way to the other side, okay? Stop.
I'm not complaining. I'm saying nobody knows how to merge onto I-77. How many times have you been behind someone that is going 35 miles an hour getting on the expressway?
But though, if the speed limit says 45, they will go 40.
The bare minimum 65 or 77.
To be safe.
Okay.
The police drive faster than everybody else.
No, that's the truth. That's the truth. No, I can attest to what you said, and I am I'm the person that's speeding all the time, so yeah, I'm the one speeding all the time.
I think all three of us do.
Yeah. Oh, yeah. But I'm trying to look at, there's comments. Everybody's agreeing with you regarding the traffic, Ortez. And I will second what you said, Sahaad. I complain about traffic here in the Carolinas. That's just because I'm spoiled now.
Yeah.
When in LA, you trying to go 2 miles, it's going to take you 45 minutes in certain parts of LA. Like it just is what it is. When I lived in DC, like you might as well just consider it an afternoon trying to get to Bethesda sometimes. So yeah, no, but again, I'm spoiled. If it takes me, both of you can attest to this because I've bailed on both of you. If it takes me more than 30 minutes, I'm not showing up. And you all
Yeah.
know, like I've bailed on
Uh,
you. I said I was coming
it-
somewhere, looked at traffic, and was like, nope.
and it's so silly because if when you went, for those of you watching that are moving to the Carolinas, if you are a northerner, I see Sheila said that she's from New York. Okay, I'm from Philly. I went home for the holidays. A Charlotte road rage experience is, I am so sorry I cut you off. You have a blessed day. Beep beep. Okay, that's a road rage experience here. So if you're a northerner and you're coming here, this is a piece of cake. Everything. Piece of cake. Everybody's friendly, everybody speaks, everybody says hello. Our cities that we're from, cut somebody off and see what happens. It's dangerous.
Yeah.
No, I want to appreciate both of you for jumping on last minute. I think I hit both of you up like around 4 or 5 o'clock. Said, hey, I want to do a live stream tonight. Are y'all free? Can y'all do it with me? And thank you for being so gracious with your time. Please leave it in the comment section. I'll also put it in the description. I did not do it in the beginning of the video, so that is my fault. Both of your contact information, and if you don't mind, you can share it right now, not just leave it in the comment section. How can people reach out to you, Sahaad?
My Instagram is the mortgage match. I don't know how to type in the comment box. My TikTok is the mortgage match. My phone number is 267-629-4181. You can also get my book. You can find me on Instagram, and all my contact information is there. And for the person who wanted to schedule the consultation, if you go on Instagram, there's a link there where you can schedule a 30-minute consultation and we can talk about everything.
You're not lying, Ronald. You're not lying. Nobody was friendly on Sugar Creek, but they hey, have you seen what's happening in Sugar Creek right now? Like they got some townhouses.
Yes.
Talking about gentrification. Like I'm not even gonna lie. Like I was thinking about and they're going for like 300,000 right now, but it's so close to uptown, close-ish, right? To uptown that I'm like, this might not be a bad move. But yeah, no, it's a lot going on around that area. Hidden Valley isn't quite what it was 10, 15 years ago.
So there was Hidden Valley on Gangland, and then there was Hidden Valley on Instagram with the drone and these beautiful homes. And I was like,
Yeah.
is this the same Hidden Valley?
Yeah.
Things are different now.
Things are different now. I wouldn't say, I wouldn't go jive. It's not one of those areas that, I'm not trying to offend anybody and I got to walk a line because of my license. When I see people running for pleasure, I'm like, that's a great, I want to be in that area. Like, I think I should invest in that area. It's not quite there yet. Nobody's out there just jogging, but it's coming.
One dog park. I just need to see one dog park.
Yeah.
Oh, it's coming, especially if they throw a brewery over there. It'll be there.
Oh, most definitely.
Oh, yeah. So,
Ortez, how can people get a hold of you? I'm sorry.
No, you good. So yes, Ortez Fields. You can reach me via email at ortezf at mortgage-partners.com, or you can reach me via my direct line 517-881-8352. Yes, it's a Michigan phone number, but I like it and I'm gonna keep it, hence where I'm from. But yeah, and then also, and this will be music to your ears, Sir Ashley. Ladies and gentlemen, you'll soon be able to catch me on YouTube at your favorite LOs. So we just got our banner and our logo back, so that will be up shortly. We're figuring out the posting schedule. So if y'all like information like this, just a little, we got like terminology Tuesdays, product review Thursdays, things like that. So you'll be able to get that kind of information throughout the week to help you in your mortgage buying process.
Yeah, no, definitely check out both of them. Again, I will, as soon as this ends, I will Slack. I'm going to put their contact information in the description, and feel free to reach out to them with any questions regarding mortgages and whatnot. Because if you reach out to me, I'm just going to reach out to them. So you might as well go straight to the source. And if you want to talk about buying a home, please, I'm here. My team and I, that's what we love to do. I love real estate. I'm looking at it all day, every day. I'll say it's unhealthy that just about all my conversations are about real estate, even with my daughter. But it is what it is. I love what I do. So thank you again for watching and tuning in tonight and rocking with us. I'm gonna make this more consistent. I know I said that last time, I think, but no, we're going to be more consistent with the videos. I just needed some time. I needed some space. And I just, only so many times you can say, I was actually on the phone with somebody earlier today. Only so many times you can just say the housing market is not going to crash because everybody else is saying it's going to crash, right? The numbers speak for themselves. Like from peak to trough so far, nationally, we only gone down 3%. Now, if that's a crash, we went up 42% in the last 2 years. So 3%. And when we go down anywhere 3 to 5% every year in the fall and winter. So it is what it is. I just got tired of saying the same thing. So I needed a break. But we are here to just provide value to you. And if there's something you want to see or talk about, please drop a comment. Let us know so we can provide that to you. Both of them have their own YouTube pages that they will be posting on as well. So they will welcome your feedback to provide you content that you want to learn about. So again, thank you all, and I'll talk to you later.
Bye.